All right. What is up, traders? What's up, tycoons? Super excited for today's video. Big week ahead of us. Okay. We have basically the largest amount of earnings happening this week, with tech leading the way. And we also have industrials and healthcare right behind. These are some of the heaviest and most important components of the market. So we're going to go ahead and prepare. Right. What we've got here is our SPY chart. Okay. This is your S&P 500 chart. And we've got our anchored VWAPs on here along with our 200-day moving average. And we're just going to go over some of the dark pool levels, the call wall, put wall, zero gamma levels, and go over, the range, okay, basically the expected move for the S&P 500 this week. And then we'll also go over how you can, find day trading opportunities, using some of these levels and, trading the opening range. All right. So be sure to smash the like button, subscribe to the channel if you guys are new. All right. As always, though, the content provided on this channel is just for informational and educational purposes and is not meant to be relied upon as legal financial advice. So we'll go ahead and get into it. We've got our dark pool levels up here, our 2 sigma move. Okay, what that is basically twice the expected move. And you can see that the 2 sigma move up here at this range is right around 430. There's also a large dark pool level over there at that 430 level. Okay, max pain is going to be around 423. What's really interesting to me is that the max pain level is right next to our 200-day moving average. Now, max pain is the point at which, call holders, which are people playing options betting that the market will go up, and put holders, people playing options that betting that the market will go down. Max pain is that level, all right, where essentially the people holding calls and the people holding puts will experience, max pain, right? And that's where the most number of contracts will expire worthless at $0. Now, some people think that price, gravitates towards max pain, and some people think that it tends to stay and stray away from max pain. But what I really think it's interesting is that the max pain level is right up here at our 200-day moving average heading into the week. So that'll be really interesting to see, this upcoming week. Is price going to gravitate towards that max pain level? Or are we going to consolidate down here and potentially even drop lower, right? Now, it's noteworthy that that is above our expected move, right? So we've got the weekly expected move here up top, and down below, that's going to be at 489 as well as 420.47, right? And that's essentially this shaded box area right here. Now, what's interesting about that as well, okay, is that we've got a dark pool level right here at 421.25, right above, right next to, essentially the weekly expected move upper range. And the put wall is right here at $400, just below the weekly expected move to the downside. Okay, so, we went over the max pain, we went over the put wall. Our 2 sigma move to the downside is going to be 391.1. It's very rare that we get these moves, but we have a lot of catalysts. Not only do we have, the earnings that I mentioned, but Jerome Powell as well. Okay, so there's a lot of things impacting the market. If we zoom down to a smaller time frame, something like a 15-minute chart, okay, we'll go ahead and discuss the opening ranges. Okay, now I like to use the opening range and define it as the first 15 minutes of the day. That's typically what I like to trade is as my opening range. And just to give you guys an idea of how you use it, right? If you're on a 15-minute chart, it's basically going to be the upper wick and the lower wick of that first 15-minute candle. And you can use this for intraday trade opportunities. Okay, there's many different ways to use it. On Friday's trading day, the best trade setup that we had was we established our opening range high right here. Okay, and you can see we established the opening range low right here, but we weren't really getting any clear closes below it. Right, we had one candlestick that was replaced by a bullish engulfing candlestick and took us back up. And what did we get? Well, we got a basically rejection of the opening range high. So we rejected that opening range high right here. And that's a great entry for a short position. And look what the market did the rest of the day. It completely collapsed lower. All right. So, oftentimes you can, trade a rejection of the opening range high, or, a bounce off of the opening range low. That's one way you can do it. You can also short below the opening range low, right? You look for a breakdown, retest, and push lower. You can see here, we did not get a retest. What we did was we actually got that, engulfing candlestick right there. Okay. So you can look for a break retest of the opening range low to play it short. You can look for a break retest of the opening range high to play it long. That's essentially how you would want to look at some of those levels, right? We've also got the previous high of day and the previous low of day. Okay. Those are also going to be key levels oftentimes, when it comes to trading and getting some of your scalping targets. Now, if you're ever curious on how to figure out these dark pool levels, or how do I even know these things, where am I getting max pain from? It's actually available in the Discord, right? We've got a bot in here that you can just put in some simple commands, right? You type in max pain, type in the ticker that you're looking for. For us, it was SPY. We type in the expiration date. We're looking for the max pain level for this week. So we put in Friday's expiration. And you can get that instantly, right? Through the Discord using the bot, you can get the gamma levels. You can take a look at the dark pool levels for any stocks that you guys are interested in. And there's many, many more resources available in here. I also break down and share with you guys the flexible grids that I have on Thinkorswim. So you can come in here and easily take a look and, at the Magnificent Seven, right? That's one of the scripts that we've got here. You can see the performance of the Magnificent Seven versus the S&P 500 minus the Magnificent Seven. Lots and lots of useful stuff. And it's really good for understanding, market breadth and market internals. Okay. And it's something that you really want to pay attention to and start learning. Not only did we just break down essentially the moves for this week, but you really want to know what's going on underneath the hood of the market. And to show you guys what that's like, you're really going to want to watch this next video right here that explains it all and goes over the flexible grids that I have available in the Discord. There's a link to join that Discord using the description down below.